Yesterday here at the conference, Fatih Birol said the markets are entering a red zone. How severe of a supply squeeze are we headed for?
Well, listen, physically, I don't think we don't have a supply squeeze. There's plenty of oil around. You know, even today, physical oil is available. You know, I think it's absolutely right what the Saudis say. They've got enough oil to supply anybody that wants it. So, you know, what we have is a little bit more of a fear factor, which is obviously severe. You know, there won't be any Iranian crude oil probably, or very little. So, you know, to my mind, we don't really have a supply squeeze at all.
We heard from a lot of your competitors about price predictions. Yep. Today, Brent hovering around $85 a barrel. Where do you see Brent January 1st, 2019?
Listen, it's hard to see us getting over this fear factor for a few months, but I think it will. I wouldn't be surprised if we're $5, $10 lower by then, because, you know, we've got a period of when the markets won't need quite so much crude oil as well. Turnarounds in the US, for example.
It's $5, $10 lower than we are now? Yeah. So not at 100?
No.
80, 75? Yeah. Wow, that's quite contrarian.
I know, but, you know, come on. There's lots of oil around. Listen, I'll sell you 4 or 5 cargoes of Urals right now and this second.
I want to talk about Iran. How much do you see coming off the market with the sanctions hitting less than a month?
I mean, you know, I think, you know, we're seeing, you know, the Iranian exports of crude oil will be, you know, much reduced, and if they're above 1 million barrels a day, we will be surprised, you know. And also, by the way, it affects fuel oil and condensate as well. So I'm afraid it's a major change for Iran.
Do you expect the U.S. to offer any waivers?
Yes, no, I think there'll be a few waivers, but not many, not many.
President Donald Trump has been saying that OPEC's ripping off the rest of the world. Do you think they're ripping off the rest of the world, or how much more do you think the Saudis can go higher?
I mean, I have to be careful here because, you know, the president is obviously his own man, and, you know, I'm looking forward to his morning tweet, whatever that might be. But, no, listen, you know, I think OPEC is, you know, beginning to try and produce whatever they can, and that's why I'm actually a bit negative on the price. By the way, also, emerging markets are really struggling with, you know, the increased price, the depreciation of their currencies. So we're going to see a little bit less demand as well.
Well, that's what I wanted to ask you. This morning I was looking at the price of oil priced in rupees, and it's pretty extraordinary when you look at it compared to dollars.
Exactly right.
Are we going to face demand destruction?
Yes, no doubt about it, yes, sadly. Because we've got lots of businesses in all these countries, but yes, we are. Yeah.
So what worries you more? Is it a tweet from the President of the United States, maybe an SPR release, or is it trade wars?
Gosh. I mean, I think at the end of the day, you know, we want to see things longer term, and, you know, the actual trend in demand does worry me, and, you know, we've just reduced our demand forecast from about 1.6 to about 1.35, so, you know, for this year. So that's quite a big change. So, and obviously trade wars are a concern, you know, because they do begin to put up barriers which reduces trade, which I don't think any of us want.
You had a pretty exciting panel in there, and you were talking about the oil majors. Yep. They're putting money in renewables, EVs, things like that. Yep. What do you make of it?
To be honest, I don't quite understand it. They're obviously seeing, you know, a bit more. Obviously, they want to be, you know, a bit closer to the consumer and the customer-facing businesses. But these are difficult areas, and probably areas where, you know, we fear to tread. But, you know, we don't have the skill set really required.
Do you think they can make money out of it?
That's a very good question. You better ask them, not me, because I'm not 100% sure they can.
The OPEC and Friends deal ends this year. Your profitability declined a bit during this deal. It creates less volatility. What do you make? You
know my profitability better than I do.
Well, comparatively to the other years, what do you make of this deal ending? Are you excited for it? Do you think there'll be more opportunities?
No, listen, I think it's important to stress. I mean, we do see a continuation of cooperation at certain levels. These meetings that they've been having, they're not going to stop. So, you know, I think that's probably relatively good. You know, obviously, the markets have been almost more volatile than we would like. Remember, trading companies do well with trends, and real volatility we're not so great at.
So do you think the market's going to become more volatile into 2019?
You know, I'm hopeful it doesn't actually, but obviously with the situation that we're currently in, when, you know, politics is probably a little bit of a bigger factor, and therefore it's slightly more unpredictable, then I think the answer is probably yes.
A final question for you. These sanctions on Iran are to hit in less than a month.
Yeah.
Will you buy Iranian crude?
No, absolutely not. Absolutely not.